So we're going to be talking about cash. Yay. So pretty straightforward. Cash. It's yes. Okay. So understanding cash, credit cards, and et cetera, checks as well. Okay. Cash. Well, what is cash? It's pretty straightforward. It's some sort of monetary, thing that we use to trade or to, it's our way of doing business by trading cash for a good or service, right? And in the U.S., yes, we use the U.S. dollar. Now, of course, the U.S. dollar, right? It could be used everywhere in the world, okay? But just know that there are a couple currencies that are out there that are not the U.S. dollars, such as if you use cryptocurrency, if you're doing business in China or business in Europe, right? You're either going to use the euro or you're going to use yen. So in this case, we just need to understand what kind of monetary unit or what kind of monetary device we are using when it comes to making a transaction. So in this case, it's the easiest form of how we can trade cash to either purchase a product or a service. Okay, pretty straightforward. Now, understanding how a check works. I don't know if you guys actually still use checkbooks these days, but there's digital checks now. There's cash apps that allow you to transfer money with your phone. But in this case, I know that a lot of businesses, they still write checks because it's some form of a paper trail. Now, of course, how a check looks pretty much like this, right? You got your name, you got your check account number at the bottom. Other things that you need to include is definitely the date. It's your, and also the amount. Plus, number one thing that you need to have is your signature. All right, very, 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 very important. Now, dealing with this though, right? You also need to understand that this check, right? It needs to have those 5 components. It needs to have a place where it's taking the money out of. It needs the amount. It needs the date and the signature. Now, of course, businesses, right? They use checks to pay their employees, right? If they don't do direct deposit. But just understanding and understanding know how to write a check, okay, is all that I really care about in this one, right? And you have to understand that checks is considered a current asset because technically it is, in a sense, a form of cash, but it's in your bank, right? And when you do a check, we have to understand a few things, right? We know that checks don't clear right away. Why? The most important thing is the date, right? If you write a check in advance, let's say I wrote it for you to, I wrote this check and you cannot cash it out until this Friday. Think about it. That's kind of you controlling the money and when they can take out and when they can actually receive their own money. So in this case, that's what's stopping this, right? Most checks are written out to be whatever the payment period is, usually Fridays. So you can't even cash out your check until that Friday. So, yes. So understanding what a check does and how it works. And same thing. All right. And it also depends on the second person, right? Who you're writing this check to, right? They may have it and they might put it in a drawer. And depending on when they decide to deposit the check, right? That will also affect when a check is actually fully transmitted, right? Okay. So, of course, the easiest and the most recognizable concept for today in temporary a temporary way, and say if you don't have cash on you, it's pretty straightforward. You got credit cards, right? We, in today's society, we live off of credit cards, right? And it's pretty straightforward if you are doing business, right, with a credit card, you have to also assume, because these credit card companies, they are going to charge you an additional charge, right? They take a portion of your profits, okay? And it could be anywhere from 1 to 5%. And that's a lot, because you're using them to collect the money for you, okay? Or they're also paying in advance for the transaction. And that's what typically credit cards are, right? If you don't have enough cash on you and you have a credit card, you swipe, the person who swiped the credit card is responsible to pay the credit card, not to pay you. All right. And of course, it's the easiest form of way to travel, right? You're traveling, you don't want to have cash on you, especially if you're going to either out of state or even out of the country, right? It's just the easiest form of currency right now. It's the most popular. You could just whip out a credit card, swipe, and you're good to go. All right. It is considered a current liability because, again, credit card companies are not going to let you owe for more than a year. They're going to expect you to pay it back within, or at least pay a small portion of off every single month, because they charge you interest, right? So whoever the card holder is, they're going to charge you interest. And if you use them to collect money, they're also going to charge you a percentage off the profit. So either way, you will never win when it comes to credit cards. Okay? All right. So now here is the portion that I am going to be talking to you guys about. Very, very, very important that you know this, because if you do go into business and you do potentially create this, it's called a petty cash fund. All right. Now, what is a petty cash fund? It's pretty straightforward. It's a lockbox that you use for minor expenses or minor transactions, right? So, for example, I have a lockbox, right? And I need to buy some party supplies. I don't want to pay out of pocket. So what I'm going to do is I'm going to create a petty cash fund for those minor expenses. What if you bought a pizza? How are you going to pay? How are you going to tip the delivery man, right? You're not, if you pay with credit card, then you always pay with credit card. But in this case, you could be like, okay, I got some extra cash from the petty cash fund, and I'm going to give you some money to pay that extra delivery charge or tip, whatever you want to call it, right? It is for minor expenses to the business, all right? Especially, of course, there's lots of ways that you can go around this, right? A lot of common things that we've seen before is a lot of the workers, they would buy it on their own credit card and come back to you and say, hey, reimbursement check, right? But in this case, we can go ahead and skip that process, because you can just take the money directly from the company, right, to pay for whatever expense that you need to pay for that is for the actual company expense. So again, things that are characteristics of them is going to be, you need a physical lockbox. And when I say a physical lockbox, you don't want money to be lying around anywhere, right? You don't want to have a stash in the drawer somewhere, because anybody can take it and anybody can just, not report it, right? So you need a physical lockbox. The second thing is you're going to create a ledger account, all right? So again, we'll talk about that when we move into our fictitious business, when we talk about the general ledger. But that is one of the key components, is you need to create a general ledger account for the petty cash fund. Okay? All right. Again, for minor expenses that are for the business. So, yes. Now, this we're going to go through a scenario, right? So in this case, I want you to establish a petty cash fund. Okay, so again, for those minor expenses, right? I need to go buy paper. for the company, you can go ahead and be able to establish a petty cash fund for this. All right. So in order to establish a petty cash fund, right, you need to first talk to the manager, because they are going to be the one that's going to create this fund, right? It's either the manager or the boss, right? If the boss approves of this idea, right? Of course, the manager is going to have access to it, right? We're going to have to designate someone to be in charge of the petty cash fund, right? You can't just have a lockbox full of money and no one's in charge of it, because ultimately people can steal from it. Okay, so you need to have some kind of a manager that will establish and also be the one in charge of the thing. All right, now we gotta also journalize this transaction, and then lastly, create a ledger account for this account. So in this case, on January 5th, you establish a petty cash fund for $500. So here, pretty straightforward, right? We've opened up a new account, right? In order to even start the petty cash fund, you need to have money in there. So in this case, I could have gotten money from from your bank account, and I'm going to place it into my petty cash fund, just like that. All right. So now the next thing is going to, how do we increase our petty cash fund? So again, the manager is going to have to agree to this, because whoever is in charge, right? They need to look at their expenses and determine, well, is there a reason why I need to increase my petty cash fund? Is my expenses last month not enough, or the minor expenses that I did last month not enough to cover those minor expenses? So once I've done that, I'm going to journalize this. So on February 5th, you increase the petty cash fund by $250. Now, understand this, because now it's starting to get a little weird and starting getting a little confusing. Now we are increasing the amount of petty cash fund that we have. So no matter where we at, and we're increasing it, right? We're increasing it by adding more money to the petty cash fund. Now, when we establish it, this will make a lot more sense, right? When we reimburse it, it will make a lot more sense. So in this case, we're increasing it by increasing our petty cash account by $250. Now, from January, I originally have $500. If I'm increasing it an additional $250, how much am I going to be actually having in my petty cash fund? Okay, I should be having $750 in my petty cash fund. Okay, now here we're going to determine how we actually spend our petty cash fund. So again, right, if we are constantly taking money out of our petty cash fund, one thing that you have to do is, whoever's the manager of the petty cash fund is, that they need to keep track of exactly what you've purchased, what you're taking the amount for, and you need to come back and give me the exact change. So in this case, as we make our expenses and we keep pulling money out of our petty cash fund, the person is going to record the transaction. So every time you open up the petty cash drawer or the petty cash fund, you're going to notice that it's less money is going to be in there and more receipts are going to be in there. So no matter where you are at any point and given in time, your box will eventually get bigger and bigger and bigger, and it's going to get full of receipts. Okay? So, the whole petty cash jar right now, if it's $750 right now and we just keep spending, right? I paid this, I took the money out to pay for this, right? I have the receipt. I gave you the proof that this transaction has occurred. So what's going to happen is that the petty cash fund is going to equal your total amount of receipts with the remaining cash, and that total is going to be what you establish the petty cash fund for. So at the end of February, right? If I've done all these expenses, my petty cash drawer should equal a total of $750 worth of receipts. Okay, and maybe some change if there is some change. Okay, so in this case, we are trading money for a receipt. And no matter where you're at any point in given time, the lockbox will always retain and hold the value of the amount that you established the petty cash fund for. All right? So here, hint, 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 you are not to ever, ever journalize you taking money out of petty cash. All right? For every minor expense that you've done, you're going to hold off because at the end of the day, at the end of the month or your period, whatever it is, that is when you're going to calculate the total amount of receipts that are in the petty cash drawer, and then you're going to record those as whatever expense that has occurred. So for example, I took the money to buy a ream of paper. At the end of the period, I'm going to record that as supplies. Okay? And then how I record the rest of the information is going to come as follows. All right. So in this case, your lockbox, your petty cash fund should equal the total amount of receipts that are in the petty cash fund is going to equal the amount that you established the petty cash fund for. All right. So in this case, we're going to reimburse the petty cash fund, and how we do that is pretty straightforward. So on February 20th, you increased the petty cash fund by $250. Yes, we've recognized that, but now we're also going to reimburse or replenish. We call it replenish. So this was the last thing that we did here. So now we're going to replenish our petty cash fund. So right now it's at a total of $750. Now here are the expenses that I have created, right? Okay, I can't. So here are the expenses that we've created. So I bought supplies, office supplies. I had a delivery fee. I paid for some business supplies. I also bought some party supplies, and I bought some coffee for a meeting. So all of these, right, are just minor expenses that I've incurred, and I've paid that I used the petty cash fund to pay the remaining amount. Now, with this, okay, you need to know that in order to replenish a petty cash fund, right, if your box is full of receipts, and right here for this example, I have a total of $178 of receipts, all right, and my remaining amount is obviously going to be cash. Now, to replenish it, what you're going to do is you're going to actually either write a check to the petty cash fund, or you actually take money from your checking and you redeposit it. And you're basically, what you're going to do is you're going to take those receipts and you're going to trade them in for cash. So basically, you're going to cash your receipts out, and you're going to replenish it by adding the same exact amount of receipts with cash. Okay? Is everyone with me? All right? Does this make sense? Okay? So, like I said, we're taking our receipts and we're cashing them out for more money. And no matter where we're at any given time and point in time, whatever you established your petty cash fund is what you're going to keep it at all times, unless you decide to either increase it or you decide to close it out. So in this case, these are my February expenses that have occurred over the month, and here I only did $178 worth of expenses for February. Okay. And then lastly, if you decide to not ever use the petty cash fund, right, you can close it out at any given time. All right, so in January 1st, let's say I decide, you know what, I got a business credit card and I'm going to let whoever wants to use it, okay, or whoever wants to check it out, they can take it and they can use it to pay for their minor expenses. So in this case, I don't need a petty cash fund. It's not going to be useful for me anymore. So how are we going to close it out? Pretty straightforward. You're going to credit the petty cash fund, and obviously you're going to take that money, you either dump it into your checking account, or you can just have it cash readily on hand. Now, of course, that's also dangerous to do as well, right? You never want to be walking around with a bunch of cash, right, and leave without reporting it. So in this case, if we're going to close out our petty cash fund, that's just how we're going to do it. Simple, straightforward. We're going to just credit or zero out the account, and we're just going to take the money and either put it into the bank. So as far as this, it is pretty straightforward, and this is all the concept I would want you to know as far as moving forward with chapter 9. Okay? Any questions in regards to just establishing a petty cash fund? Okay? A great example, and we will look into it when we do with our exercises, is a petty cash fund in a sense is like having a cash register, right? You need money in the cash register, so you need to either pull that money from a checking account and fill the cash register with money, so then when you're dealing with your customers, you give them their change back. And in most cases, if you've ever been the person that is the cash register person, every time you make a sale, you rip that receipt and you pile up it in a pile. This is essentially the same exact idea, right? Because at the end of the day, you're going to count the receipts, right? Your total amount of sales that you've done. You're going to count the amount that's cash that's in your register, and you're going to fill up the register with the same amount of receipts that you've done, because at the end of the day, the next day you need to prepare for the next day of sales, right? You can't just leave your cash register with low cash. You need to fill up the cash register. And you also need to match the number of receipts that you have with the total money that you started with, okay? And yes, the most perfect example of a petty cash fund is going to be a cash register, all right? So the next concept is going to be somewhat relevant, somewhat not relevant. So if you are like this, right, if you do plan to have a cash register, this is actually very important, all right? Especially when you're dealing with, a lockbox that has money in it, and you're counting your receipts, and you notice there's a discrepancy. They're not matching up, right? There will be often times where you may have more money in the cash register versus having less money. Now, obviously, the assumption, if you have less money, someone went into the cash register and took money. Now, oftentimes, you'll see more of an overage because a lot of customers, right, they'll be like, you know what, you can keep the change. And if they say that to you, right there, you already incurred an overage, right? Your cash register or your petty cash fund will always have more money than it originally started with, okay? Because of that reason. Now, again, shortages, there are many reasons why you can have a shortage, right? People who take money from the register or people who take money from the actual petty cash fund, they might not have recorded their transaction. So they may take it, like it could be like the owner, oh, I need $20. They grab it, they don't care to record it, and that is one of the reasons why you would have a shortage, because they never reported it in the first place. So in this case, those are the scenarios that I've given you. So let's go ahead and look at an example of a shortage. So again, you established a petty cash fund for $600, right? And then on June 30th, you need to replenish the petty cash fund, and then you realize that you've counted the total number of receipts, and it only amounts to $590, right? And then and there's no cash remaining left in the petty cash fund. So here our petty cash fund is supposed to be in total for $600. But in this case, we're missing $10 from our petty cash fund. So what we're going to do is we're going to recognize every single receipt in there, right? Because that's what we have to do in order to replenish it. But because we're missing or we're short by $10, we're going to have to recognize this as a cash shortage, okay, of that extra $10. And you're going to write another check for that $600 extra dollars, okay? So in this case, we couldn't find out why or where that $10 went. So we decided to just, because we established our petty cash fund as $600, we're keeping it at $600. Okay, so in this case, it needs to stay at $600 because we're not increasing it. It needs to be at $600. And how we report that $10 extra shortage is going to be with an account that says cash shortage or overage. All right, pretty straightforward, but again, I do not need you to really know this concept. Okay. Now, what happens if we have an overage, right? Again, same scenario, except this time, right? You notice that you establish your petty cash fund at $600, and you calculated your total amount of receipts, and you have a total of $600 worth of receipts. However, in your drawer, you also have a remaining of $20. All right, so I don't know how that's possible, but again, so in this case, we're going to record it like this. So we have our expenses that total up to $600, right? And we're gonna also record that we have a cash shortage / overage of $20, and of course, because we have the extra cash left in our drawer, we're also going to write a less amount because we still have cash in the drawer, right? Either way, no matter where we are, we recorded this amount and we are still at $600 in our petty cash fund. Because what we're going to do is we're going to take that extra $20 and we're going to apply it to the petty cash fund. Okay? So that's what you're going to do when you adjust your petty cash fund, as well as adjust for all of those expenses that had occurred throughout your entire month of expenses. Those minor expenses, you need to report them. Okay? So again, chapter review. All I need you to know is what is a petty cash fund, right? Pretty straightforward. It's just a lockbox with money. All right? Few things that you need to know. You need to know how to establish it. You need to know how to either increase or decrease it. And you also need to know how to close out a petty cash fund. Most important thing that you need to know is how to replenish it, okay? So again, we are not going to be dealing with the petty cash fund directly. We're going to wait till the end of the period, or in this case, this is an adjustment entry. We're going to total up our amount of receipts and make sure that we recognize each expense. And then we're going to replenish our petty cash fund with a check in the total amount of receipts that are in there. All right? Any questions in regards to petty cash fund? Right?
No, from mine.
Okay.